Mr. Scott Kiesling here. For most of us, we know who he is, but for you two guys, we don't know who he is. Scott is a mortgage broker that helps us out here in the office. The office is literally right next door, so anytime you have a mortgage question or need to work with a buyer to get them kind of maybe pre-approved.
Right here by Corey. Oh, thank you.
This is a great contact to have, and it's really nice to be able to have him in our office to help us out at any time. So he's been a nice asset to our office environment here. He is going to be going over some different things with FHA and VA and a loan program called Home Path, which is, does anybody know what Home Path is? All right then.
Good. We'll be able to teach you.
Yeah, you are needed. You are needed.
Well, guys, what I've done really is just taken some bullet points from programs and put them down in writing for you, kind of a quick reference type guide. The first program we're going to go over is FHA. FHA loans are basically out there in the market for, they've been construed as people who have maybe less than perfect credit, maybe someone who can't qualify for a conventional loan. Those type buyers, maybe first-time home buyers, you hear FHA mentioned a lot with them. One of the main benefits with FHA is the fact that you only have to come up with 3.5% down payment, and that 3.5% payment can be a gift. Okay, and that's important to understand that if they have a relative who wants to help, those kind of things, the only way they can help with down payment is not on a conventional loan, it's on FHA. Okay? So they can go ahead and gift the entire 3.5% down. So really your borrower can have no money and still get in a home. Okay? Because you can also go ahead and have the seller pay up to 6% of closing costs and prepaids. Okay, so you know, on a $150,000 purchase, obviously 6% is going to cover everything you would need them to cover. Okay, from insurance to taxes, those kind of things. Okay, they can literally put $1,000 down as an earnest deposit and get $999 back at closing. Okay, as long as you have the 3.5% as a gift, wherever you want to do it. Okay, they can get their money, their particular money back. Okay, do you guys have any questions about that?
I did, but I asked you before just so that everybody has a clarifying question. It doesn't matter on the 3.5% if it's a first-time buyer or recurring. It's the same across the board.
It does not matter. FHA is not a first-time home buyer program. Right. I mentioned that, but I just want to be clear that you could have owned 20 homes and get an FHA loan. The only caveat to that is you cannot own an FHA home and try to buy another one. Okay, you have to have sold that one.
Okay.
So a lot of people, sometimes people try to go ahead and maybe rent out, have a rental property that may be on an FHA loan. The only way to get that thing done is to refinance it so you can buy a new home with FHA.
That's good to know.
Not have two FHA loans at the same time.
Okay.
Okay. Now, minimum credit score. Now this is a very gray area because there's a new program that just came out that allows, it's called an FHA qualified program, maybe credit scores down as low as 580. Okay.
Wow.
Now, take that with a grain of salt because I haven't seen any that have gone through yet, but then again, it is a brand new program. Okay. I know they require 5% down, and on that particular program, it needs to be your own money. What I'm going to say with that particular program is, if we get together and we run credit on somebody, and their credit score is below 640, significantly below 640, but the credit is, this is the best way to put it, bad in the right places. In other words, maybe they had some medical collections. Things that an underwriter is going to look at as and give you more sympathy than if you were late on your mortgage or late on a car payment, those kind of things. Okay? There's more of a gray area though. So on that particular program, it's going to be a case-by-case basis. Okay? So we're going to go ahead and get together, review the credit file. I'm going to get with underwriters and figure out if it's a type of loan that's going to go through. Okay? So it's easier for me to look at and make that determination than it is really for you to try to explain to your clients what will and will not qualify for that particular program. Okay? But as far as the minimum credit score of 640, that's for your generic FHA loan. Okay? When I pull the credit, I need the middle repository. It pulls 3 scores to be at least 640. Okay? If that credit score is close, then what I do is I run it through a credit simulation. and figure out if there's any points out there that we can get back. Okay, maybe some stuff that may have expired should have dropped off. Maybe a credit card that if we paid down a little bit, it'll get to a balance that'll give us 2 or 3 points. Those kind of things. Okay, but that's really once again my area to decide. You just bring it to me and I'll figure that out for you.
Oh,
okay.
That's the great thing in real estate, especially for you two guys. It's not necessarily what you know; it's who you know. Because I don't care to know everything that Scott Kiesling knows. Right. I just need to know that I know Scott Kiesling. You know, and so when I've got a buyer that is looking, I know that I sell real estate. He does mortgages. I am not going to try to do their mortgage or try to help them out or figure anything out for them. I'm simply going to turn them over to him and let him do his job.
Take care of that. Right. Okay. And that's a great point, and that kind of leads into the second part of this FHA program highlights that we're looking at. And that is the things that you're going to need to figure out when you're having an FHA offer are how to figure out the mortgage insurance. Okay? Does everybody know what mortgage insurance is on FHA loans? Okay. Mortgage insurance, I mean, it's a fee that you pay to FHA for the privilege of having an FHA loan. You pay it up front and you pay it monthly. Okay? So if you look at the example on how to calculate the loan amount with mortgage insurance. Okay, and I use an example of a purchase price of $150,000. Does everybody see where I'm at? Okay, so the purchase price of $150,000, you're going to put a down payment of that 3.5%. Okay, that's your minimum down payment. Okay, so the base loan amount is $144,750. Okay, now you pay an upfront mortgage insurance fee, a one-time finance fee on FHA of 1%. That fee is $1,447. See, that is simply just 1% of your base loan amount. You add the two together, and that gives you your total loan amount. Okay? Now, the second part is figuring out what your monthly mortgage insurance is. Okay? And that's going to be part of the monthly payment. This actually just changed on Monday. FHA raised their mortgage insurance premiums. Okay? So all you do on that is you take the total loan amount that we went over times that factor of 1.15 and divide it by 12. And that's going to give you your monthly mortgage insurance.
Good question. PMI, if you put 20% down on an FHA, will it remove it?
No, not on FHA.
Okay.
If you're putting 20% down, we're going to go conventional.
Okay.
Okay, there's going to be very little reason.
Figured there'd be no reason.
Well, there may be for credit issues, those kind of things, but we're going to find a way to probably try to get it to go conventional versus FHA if you're putting 20% down.
Okay.
Yeah, MIP is you're stuck with it, okay, and you're stuck with it for at least 5 years. Okay, you may be able to get it removed quicker, but you are going to be stuck with paying mortgage insurance on FHA loans. Conventional loans are different. We won't really get into conventional loans today. Okay.
Quick question. PMI, MIP.
MIP is mortgage insurance premium. It's FHA's version. PMI is private mortgage insurance.
Okay.
Now, private mortgage insurance is for conventional loans. Okay, it's what a lender will go out and find an insurance company to insure the loan. Okay.
So wait, at the bottom it says PMI.
That is my mistake. Then.
Okay.
Okay.
Monthly monthly MIP. Sorry about that.
Okay, so
Got it. I'm with you.
Yep.
MIP.
Good catch there.
That's the only reason I brought it up because it's PMI. And I've never known the difference between PMI or MIP. I've seen it done both ways. I thought it was the same thing, but
it's basically it's a fee each month. It's what type of loan you're getting.
Get to write down.
Good morning, Mr. Graham.
Good morning.
Okay, so insurance premium. Private mortgage insurance. So, private mortgage insurance would come into play if it's not an FHA loan.
Right.
If you're doing some sort of conventional financing where it's like a 10-10-80 or an 80-10-10 or...
Well, 80-10-10 is basically a way to avoid
that.
Void monthly mortgage.
So how do you...
back up, 80-10-10.
It's an 80% loan, and then you have
10%.
10%. You have a first and a second.
And they're not as popular now because the second mortgage companies aren't willing to lend money as much. It's to higher loan to values. Yeah. So we're not doing as many of those as it used to be. Used to be you do 80/20s.
Yeah.
But once again, I think Brad has that on the schedule for